Good morning, everyone. Welcome to our live daily market outlook. We are at the beginning of the week, Monday, 10th of September 2011. Hope you had a good and relaxing weekend, and we are back to the business. As we already know what happened last week, a lot of releases, very important releases with the central banks, and that actually signaled some possible action, especially in Europe, with also the Fed recent data released on Friday, NFP data showing quite disappointing reading, now prompting the Federal Reserves to act further and fasten possibly their action for the release of next session of quantitative easing known as QE3. Also, the Eurozone now enters quite dangerous week with potential obstacles seen in a more optimistic, rather optimistic mood now after investors welcome the European Central Bank plan to prevent breakup of the single currency. But German judges, Dutch voters and IMF inspectors and of course Brussels regulators could all spring surprise that make it harder to resolve a sovereign debt crisis which is almost 3 years old and putting a pressure on the world economy. The Wednesday is basically the main day to watch as German constitutional court rules then on the legality of the Eurozone Permanent Financial Rescue Fund. The European Commission unveils detailed plans for a Eurozone banking union, and the Netherlands holds a cliffhanger general election. Then European finance ministers meet in Cyprus from Friday to try to thrash out differences over banking supervision and possible, I do apologize, possible extra aid for Spain, the zone's fourth biggest economy, and Greece, the problem country that first triggered basically the crisis. Decision on Spain and Greece are not likely until October, but the talks may point to whether Madrid will apply for European assistance at the risk on unpalatable conditions and supervision, and whether EU and IMF inspectors are leaning towards allowing a vital bid installment to keep Athens afloat. Europe has been holding its breath for 2 months for the German court ruling, a potential showstopper. All 20 legal experts that made the poll expect the judges to let the European Stability Mechanism and the European Fiscal Discipline Pact to go ahead, but most expect them to add tough conditions for the future bailout. That could potentially tie Chancellor Angela Merkel hands, or at least make her backing for bailout politically even more difficult, given a public backlash against last week's ECB decision to buy the bonds of vulnerable states. So this was the brief outlook what we can expect in the coming week, as a lot of news have been released during the past week and a lot of action seen in the markets. And not to waste our time, as today's calendar is quite thin, we have only the Eurozone from important things, Eurozone Centix investor confidence that is due at 8:30 GMT for September. Slight improvement, I would say, is seen in forecast at minus 29.6, still quite negative reading compared to August release at minus 30.3. As always, Monday is poor with the events, most of things come later in the week. So we're going to take a look at the currencies and see the technicals and outlook for today and the near-term action. As said, the euro extended its rally backed by Thursday's and Friday's release of very important data and pushing through important 128.00 barrier. That was our initial target and the psychological barrier. Now opening way, as we can see on the daily chart, for a stronger recovery, as some important levels have been taken out, 127 and 127.45, and now looking for a further extension higher. However, last week's brief break above 128 that hit 128.13, and the weekly close above 128 as set keeps the positive sentiment in play for further extension, and we can speculate about extension towards 129, 130 in the short-term period of time. But some pause in the current action is not ruled out as the pair approaches very strong barriers at 128.25, which is, let me just take a look. It's definitely on daily. This is on weekly. I do apologize. 128.25, 21st and 22nd of May peaks. Then we have 200 days moving average at 128.35, and the bear trend line of 134.85, if I'm not mistaken, 134.85 yearly peak of euro dollar for 2012 posted on 26th of February. Basically, this strong barrier might delay current strong rally and make a pause in the current gains in favor of some corrective action, as daily studies are quite extended and already in the overbought territory, while the lower time frames are very extended and already started 2 point lower, as some stronger corrective action at this stage is not ruled out. The initial support at 127.74, this is overnight low, where the gains were contained by 20 days hourly 20 days exponential moving average, is now set acting as initial support, with some other significant levels seen at 127.39 is the 23.6% retracement, while dips into 127 zone are seen as not ruled out at this point, and ideally any further dips should reverse at or above this level. This is marking 38.2% retracement of the outlook from 127.82 to 128.13. Also reinforced by 55 days exponential moving average, and ideally this any stronger dips should be contained at this point in order to keep the current bullish structure in play. Further extension lower below 127 sees risk of testing 126.50 trendline support and 126.61.8% retracement, a loss of which would be definitely bearish and would put the near-term bulls on hold in favor of some stronger corrective action. For now, as said, ideal reversal in case of any deeper dips should occur at or above 127 level to keep the dips in play, and above 128.13, which is the latest high. We are facing a very strong barrier at 128.20 zone, and some pause and some delay in the current action, as this is quite a strong barrier, is not ruled out. Anyway, further break above this level, surge through this level, is to open next 129.00, and then we have 129.34, 61.8% retracement of the larger down move from 134.85 down to 120.42, and then of course 130.00 as a strong psychological barrier may come in the short-term focus in case of break. But to repeat, quite strong barrier ahead of us, sees potential of some more significant corrective action before the pair attempts again through this barrier. The similar situation is seen with the cable, as it broke our initial target and psychological barrier at 160.00. 160.33 was seen on last Friday's strong rally after quite disappointing US NFP data that were dollar negative and pushing the opposite currencies significantly higher. A brief consolidative corrective action has so far been contained at 159.90 zone, contained by hourly 20 days exponential moving average, and this marks also approximately at 38, basically exactly 38.2% retracement of the latest upleg from 159.20 last Friday's low to 160.33 last Friday's peak, post data rally peak. So far it seems that pair is again accelerating action at the beginning of European session, as we have already moved higher above 160.00. It seems that good support was found at this zone, and the possible further extension and attack at 160.33 would be quite likely scenario if it continues. Just to mention that our indicators started to point higher after emerging of overbought territory. Might be good signal. Anyway, the reversal the reversal is at this moment still signaled on quite extended 4-hour chart studies, as the stochastic is already pointing lower. That could signal not for sure, but according to current technicals, the other indicators already started again to point higher, so we might see quick extension towards 160.33 and a possible break of this level to resume the larger uptrend from 152.67, as we have 160.60 zone, previous high of 2nd of April 2012 and the low of 9th of May 2012, as well as approximately 76.4% Fibonacci retracement of the larger 163.00 to 152.67 down move. Again, from the downside, as the pair so far found a footstep at 159.90, this acts along with the 160.00 as initial support, while 159.64, which marks 61.8% retracement, reinforced by 55 days exponential moving average, offers next quite strong support. In any case, a break below 159.00 would delay the immediate bulls and allow for a deeper corrective action. For now, the pair remains quite well supported, and as at loss of 159, that also marks 50% retracement of the up leg from 157.69 to 160.33, would signal a stronger reversal. Currently, the price action of after the European opening is again above 160. That keeps prospect for possible retest of 160.33 and extension up towards 160.50, 160.60, and possibly 161, another psychological and round figure barrier. The dollar yen lost ground on Friday's repeated attempt at 79.00. The first failure was on Thursday, 79.03, and last Friday's 79.01. This was actually our break point, and it was also 61.8% Fibonacci retracement of we have it, I think, on the 4-hour chart exactly, 61.8% of the latest down move, with the strong fall seen on after Friday's NFP data, and loss of the upper boundary of strong 78.20, 78.00 base, extending losses so far to 78.00, exactly the bottom of the base, where the price action showed some corrective movements as the hourly studies went deeply into oversold territory. For now, the correction is limited at initial barrier at 78.30, just ahead of 20 days exponential moving average. At this point, I would say only regain of 78.60, 78.80 approximately is the 61.8% retracement of the latest down leg, and 78.80 is the previous range top, and our previous resistance would provide some relief for the pair and avert immediate downside risk for possible retest of 79.00. Otherwise, renewed attempt lower, as the studies on the lower time frames maintain a negative tone and stay in the negative territory, along with the dailies that recently broke below their midlines, seeing more potential towards the downside, as 55 days moving average keeps immediate action capped, along with the 90 days one, and above this is the 200 days one at 79.29, with that cross seen on the 27th of August, where the 90 days moving average crossed below 200 days one, seeing basically more potential towards the downside, with loss of significant support and base at 78. 00777.90 to signal extension down to 77.65, low of 1st of June 2012, also the low of dollar yen for the year 2012 so far, break of which to signal extension of the larger downtrend from 84.17, 15th of March, a yearly peak, and open levels on the downside at 77.30 and 77.00 on a break. And the last one from the majors, dollar Swiss, also in the strong downtrend, the acceleration of losses seen on last Friday's release of US NFP data, with the further extension lower and the loss of our important 95.00 base, accelerating loss so far to 94.32. This is the low, breaking below initial support at 94.61, low of 29th of June 2012, and approaching a very strong support zone at 94.20, low of 18th of June, 94.00, 61.8% Fibonacci retracement of the broader uptrend from 90.41 to 99.70, reinforced by 200 days moving average. So basically our key support is at 94.00, as recent dips stopped just ahead of this level, and a slight corrective consolidative action is seen on overbought near-term studies. So far gains broke above the overnight's high at 94, last Friday's intraday's high at 94.65, as well as 20 days exponential moving average on the hourly chart, seeing potential for a possible stronger corrective action of latest down leg from last Friday's peak at 95.78, with the regain of minimum 95.00, 95.20, whereas the 61.8% retracement of the down leg seen required to ease the current bear pressure, and possibly open way for some stronger recovery phase. However, the negative tone that dominates on the lower and the larger time frames, as the pair remains in the strong downtrend in the past 2 months or so, from 24th of July 2012 peak at 99.70, sees potential for further retracement, especially that recent losses last Friday broke below the psychological support and the double bottom at 95.00, now opening way towards 94.00, a very strong support, and basically our next near-term target. On the upside, as said, regain of 95.00, 95.20 is required to provide relief, but any stronger corrective action needs regain of minimum 96.00 to confirm the near-term base at 94.30 and allow for a stronger recovery, which is at this point, I would say, quite unlikely. And the crude oil maintains its short-term range trading, defined on the downside by 93.94 and the upside 97.64, and traced with this range following a pullback of 98.27, a peak of 23rd of August 2012. Quite neutral tone seen on the 4 and 1 hour chart studies, with more oscillation in the indicators movements seen on the hourly, but range is still well visible, and the break of either side is basically required to define the further direction of the oil's price. Slightly descending studies indicators on the daily chart, as the price action remains limited by 200 days moving average, currently at 96.64. See the downside a bit more vulnerable as the price action loses momentum, as shown on the daily chart, and sees potential for a further corrective action of the larger up move from 77.27 that peaked at 98.27. Overall, the picture is still bullish, and still sees potential of further action, but delay might be seen on the current hesitation under 200 days moving average that might be triggered for some stronger corrective action. Ideally, any stronger dips, I would say, should be contained above 90.00, as we have the crossover of 55 over 90 days moving averages on the daily chart that are underpinning the current action, and ideally any reversal should occur above 90.00 to keep the short-term bullish structure in play. Loss of 90.00, I would say at this point would delay and keep the upside levels on hold. Otherwise, break above 96.60 and more significant 97.60 and 98.27 is required to open our next target, and a very strong barrier and psychological barrier at $100 per barrel. Most of the oil action is seen supported or pushed by the fundamentals and the political situation, as current unrest in Syria and the Gulf is seems to be a bit priced out at this point, and does not reflect much in the short-term price action. But said most of the movements are seen on the fundamentals and news rather than technicals, at least regarding the crude oil. And finally, to have a quick look at the yellow metal that appreciated on last Friday's dollar negative data, breaking again above 1700 after brief corrective action, found support around 1688 with strong rally extending again so far to 1741, currently consolidating within the approximately 10 pips range on the Monday's opening. 4-hour chart studies are quite extended and in overbought territory, yet no firm signal generated on the reversal action, but this is not ruled out according to the current technical outlook. We might see some corrective action with the initial support set at 1733, then 1713 previous high, and 17 this is reinforced by 20 days exponential moving average, and the 1700 is around figure support ahead of last Friday's low at 1688. Also from Fibonacci levels of the latest up leg from 1590 to 1741, around 1682 is the 1682 is part of 38.2% retracement, along with our 1688 higher low posted last Friday, and seen as basically ideal reversal point in case of any deeper reversal. On the upside, extension second to see the bigger picture. Fresh extension seen on last Friday through 1741 cleared our 1716 and 1725 barriers. Now we're looking for 1762 high of 29th of January 2012, and possibly to see the 1790 recent peak posted on 26th of February 2012. This is also the yearly peak of gold for year 2012. Overall positive tone with the quite overextended studies on the daily chart keeps the bulls in play, but caution is required on current overextended conditions that might be signal for some more significant corrective action of the yellow metals surging price. That was all from my side. Now you can ask your questions, send your questions, and I will try to answer your questions. Thank you. Yeah, okay, we have the Aussie dollar as our standard post-session question. Let's take a look on the Australian against US dollar as in quite significant corrective action. I'm just awaiting you to see the screen. Okay, as we can see the bounce of recent low at 101.65 last Thursday, Friday low, and strong rally higher. Again, so far 104.00. This was our initial upside target and the initial barrier as the pair broke above the daily Ichimoku cloud, and currently the Ichimoku Kijun Sen line is currently limiting the upside. On the daily break and the close above 200 days moving average, that was I think from Friday's or last Thursday's session when we mentioned that is acting as quite a strong resistance. We had a surge through this barrier and close of weekly close above this level, close at 103 and 92. Now sees potential for further extension higher as the dips were contained close to 38.2% retracement, actually a bit below 101.66, where basically in the 90 days daily moving average contain the dips. The daily studies, daily indicators are still in the negative territory, with the current move seen as a corrective action, and unless we see a gain of I would say at this point 105.40, let's just take a look on the Fibonacci's approximately 104.40, which is 61.8%. Break above this level is to open 105 and 105.40 and 10 focus completely higher, with the still a negative tone seen on the daily chart. Current move is seen as corrective. On the 4-hour, the pair already started to correct lower on overbought conditions, with the gap lower seen, gap lower opening seen today, as the price starts to move lower. Let's take a look on the supports. 23.6 of the latest up move from 101.65 to 103.99 seen so far, 103.44. We have the 103.00 as quite strong support, 38.2% retracement, and both 55 and 9 and 20 days exponential moving averages. Any further extension lower should ideally reverse here in order to resume the current recent leg higher from last Thursday. Otherwise, loss of 103 could be quite risky, as the larger picture downtrend is still seen in play. On the hourly, the negative tone is still dominating, as all indicators are pointing lower, emerged out of the overbought territory, and as said, 103 seen as ideal reversal point in case of deeper reversal. Any further question, please? Okay, if no questions, then I would like to thank you all for being with us today, and expect you, of course, tomorrow at our regular session at the same time at 7 o'clock GMT, or 10 o'clock local Cyprus time. Also, all those that missed it or connected later, you can find this recorded version of this session shortly will be uploaded in the YouTube. Our page is called Windsor Brokers Forex. I wish you a nice day and very successful and profitable trading. Good luck.